Welcome, guys. Welcome, everyone, to our biweekly free webinar. I'm your host, Dr. George Ozoude, orthopedic surgeon based out of Houston, Texas. A little bit about myself. I have my own private practice. It's a solo practice for now, and it's a cash pay direct practice. I'm also on the real estate side of things as a co-general partner in 4 deals now, totaling about 1,000 doors of multifamily units and about $75 million of assets under management. I've also been a limited partner for over 8 years, starting in 2016, across multiple different real assets, including multifamily, of course, apartment acquisitions, apartment developments, funds, apartment building funds, even into other non-traditional real assets like mineral rights and agriculture, as well as medical office buildings. Really a real asset proponent. Anything that's real and tangible, that's what I invest in. And this is something that we're really passionate about, doing this webinar and reaching out to our physician and healthcare community, educating them on different ways to develop alternate streams of passive income and alternate streams of even active income. And so we're really passionate about, financial freedom and autonomy for physicians. And my journey is also alongside Dr. Adebayo Fasanya, who's going to introduce himself at this point too.
Hi, everyone. Dr. Fasanya. I'm a pulmonary critical care physician based in Fort Smith, Arkansas. Many of you don't even know where this place is. However, so I do have my own private practice also, and that I just started this January. And that's made possible by building my passive income in a safe way to be able to step out of traditional practice, being employed. And I'm loving it so far. On the real estate side, I do real estate syndication. I'm also an operator, which means I actually have a full team, which, have the acquisition manager, we have the due diligence and all the teams in place, and we do our own deals. We also partner with good operators that we vetted and we've done deals with, or we also going to co-invest with investors. So right now, I've been in real estate since my undergraduate years through my family. And after residency, I started buying my own multifamily and ultimately started a syndication company. So I've been at it over more than 10 years, but my first multifamily of my own was in 2019, early 2019. So right now we have 1,043 units, and now we are about to close another one. Is it tomorrow, Judge?
Tomorrow's closing day.
Yeah, we're going to close another 405 units in Houston, which is going to be so it's going to be over 1,000, close to 1,500 units. We also do luxury senior living. We're actually exiting one of them right now, which we started construction in about 2 years ago. We also do self-storages. We have about 5 of them. We've done, and also very big into business acquisitions. And we don't publicize that much. However, I believe that it's one of the fastest way. Real estate, I feel like probably one of the safest way to build wealth and also like moderate return. But buying businesses allow you to scale faster, but no higher risk. I'm going to stop there. If you want to learn more, just let us know.
Perfect. Tonight, we're excited about our topic. We're going to be talking about how to foster good relationship and communication lines with a general partner. And so this could be important not only if you are an LP, which we can both speak to that experience. We both have experience as limited partners. That's how we both started. And then also as GPs or prospective GPs, which Bio can definitely speak to as an operator working with other lead sponsors. So really excited about talking, I think, about this specific topic. I think there's a lot of good pearls and nuggets to use. This is a relationship business, I tell everybody. And so you want to work with 3 things people can trust. So you want to know those, you want to have those 3 things in place whenever you do business with somebody. And so The general partner is probably the most important piece of an investment. It's not the deal, it's not the loan, it's not the market or the city. All those things are important, but none of that matters unless you have a general partner who is good, who's competent, who is trustworthy, who you feel comfortable with, who communicates well. So let's talk about different ways to just get that process going. It's like, number one, what is a general partner? In these syndication deals, you have two sides, two buckets of investors. You have the general partner, and usually that will consist of a team. Sometimes it's an individual, but most of the time it's a team. Typically, it's a small team, 4 or 5 people who split up a bunch of different roles and responsibilities that are important for making the deal happen, from acquisitions to getting the financing, to getting all the legal paperwork, to raising all the capital, to managing the asset and carrying out whatever business plan was set in place in order to make it a profitable investment. And so there's a lot of things to do. That's the general partnership's job. They're taking the responsibility, and they bring on limited partners who invest as essentially the capital partners of the deal. They have, by choice, a limited role in the investment. They come on, they bring their capital, they're looking to get a passive investment, and for that, they partner with the general partners. So we're talking about how to get into the spaces of limited or general partners. Where are they? Where do they hang out? How can you establish a good relationship with them so you can continue doing ongoing business with them, maybe reinvest? I'm up to 25 investments, and there's definitely certain general partners that not only do I want to partner with, but I also want to reinvest as a limited partner with. So I've created relationships, and I've seen that they've done good job. We have good dynamic. And so I reinvest. There's about 4 or 5 of them that I've done multiple deals with. So how do you get there? So let's talk about one of the options. Bio and I will go back and forth on some of these. So the first thing is to figure out, now that we define who they are, where are they? Where do they hang out? An easy place to start looking is use the power of the internet. You can track them down on different media platforms they may be on. These social media platforms work in algorithms. If you start searching terms and start liking things on Instagram or LinkedIn, your algorithms are going to start feeding you more and more of those. Start looking up terms: passive income, syndications, multifamily investing. And that's just an example. You can find general partners in multiple different other assets, even paper assets. You can find folks who are, subject matter experts. Typically, these general partners will put themselves out there like a subject matter expert, right? So get on the social media platforms. I like YouTube. I like LinkedIn. I like podcasts. You can also find blogs and books. A lot of them author books. So you can even look up their kind of Google search terms, key hot terms for these type of investments that you're interested in. You'll find a lot of options just to start to get familiar with how they think, what they're investing in, what kind of history they have in the space, what kind of authority, what kind of knowledge that they have. You start to get familiar with them even without meeting them in person. So a lot of options at your fingertips to get familiar with them. Anything to add to that, Bio?
Yes. So, for example, in our WhatsApp group, there are people that's been there for 3 years, 4 years, and then they suddenly reach out this year and be like, "Hey, I want to invest." So there's no need to rush either. You could take your time. Of course, don't have analysis paralysis. Also, he knows about that. That you take some time, but don't be like 10 years and still trying to figure out which GP to go with. But I would say, yeah, so get on different, be intentional though, because in the beginning when I was on like 50 groups, and it's difficult to figure out which one is which, how to keep track of everybody. So eventually, like George said, they limit themselves to about 5 that, hey, wow, just like podcasts. There are podcasts you love to listen to, then you eliminate the rest. Otherwise, you're going to have 100 subscriptions, and yeah, you can't really get through all of them. So the next one is also conferences. Whenever I took some of that from many of the mentors and GP that I found in the past. So whenever I go someplace, I will usually say, "Oh, I'm going to Dallas. I'm going to be dedicate one night to come to this area." And many GP do that. So if you're in their network, you will have opportunity to meet them. There's nothing better than to actually see people face to face, shake their hands, ask them questions, see if their eyes is shifting, get a feel for who they are and how they are. Conference is a good one, especially if it's local or it's coming close by, and just put the effort and try to meet them if possible.
I got a pearl for that. Once you've identified them through just the social medias, you can start looking up different conferences and seeing where they're either going to be attending. Sometimes they announce on their platforms that, hey, I'm attending this conference, or I'm looking forward to going to this conference, or they may be speaking at the conference. So that's like a pearl of finding out where they're going. And then you start learning about the conferences. But here's another little hack, or whatever you call like a veteran move. Email them before the conference and just request, if you feel bold enough, if you feel like you've read up enough about them or not, just request a meeting, like request a coffee, request a lunch or a dinner, buy them a drink at the bar after the conference for happy hour. There's usually like a happy hour. But the key is to try to reach them before, because a lot of times there are other people trying to reach them as well. If you just go in there and you're like just trying to make connection on the first day, he may already be booked or she may already be booked with different things. So maybe a week or two beforehand, be intentional, like Bio said, reach out and say, hey, I'm coming to this conference. Could you spare 10-minute coffee before the conference starts? I just wanted to chat with you and get to know you. I've read your book. I've listened to your podcast, something along those lines. That's a little veteran move.
Yeah. And nobody is going to turn down someone looking to invest also. Be like, hey, I've been looking into investing in into real estate. And they'll be like, oh, good. So
Yep.
make it worth their while. So that's it. Another one is the mastermind and mentorship. That's if you really want to get to the next level, obviously. You've passed through the original stage, probably invested with them, or just follow them. Like my mentor, I followed him for 2 years, just watching. And then I spent another 2 years raising money with him, I would say. I used to say 4, but they consider my deals too. So those are the things that you could do also to look for mentors. And I know many people always go for that Grant Cardone mentorship. They're like, I want to go for the bigger guy. I always feel like you're too far away from them. I found it better with people that are maybe a few steps above me. And those are the ones I personally seek out. Of course, it's good to have one person also that is far out there to aspire to be, but also find people that are similar, probably even people that are just like one step above you, so that variety, and also you're learning a lot more on the grassroots. Because oftentimes when people are already at such a higher stage, they don't understand your struggle anymore. So anyway, so that's just something that I'll add.
Yeah, like I said, this is not just for LPs, it's for GPs as well. So if you're like looking to get to that next level, that could be a route. But still, there's investor clubs that are run by some of these groups. The general partner and his education group, he may have an education arm where they hold like a mastermind or investor mentoring club. Those things could be paid, it could be free, there could be different levels. You want to do your research about what is like an industry normal, because there are some that are really out there as far as price. Some of them are free. It really depends on what you value, and be careful about things that are too costly, and get due diligence and feedback from by asking others. Start going to networking events where you'll likely rub shoulders with someone who is familiar with that general partner. They're a limited partner and they're familiar with them, so you can pick their brain about their experience with them. So that's key. I took a long time. I'm a part of a mentoring club, and there's different mentoring clubs out there. And I took my time before I joined one because I was just hesitant about who I wanted to really align and associate with. And so I waited till I found the right one. It took 3 years. I even stopped looking. I was even trying to find one. And then I just found it, almost like they found me. It felt like I found the right place. And it's helped me a lot. There were a lot of not only general partners in the leadership, but there were general partners in the group as well. So I was able to do my first deal as a co-GP with another member of that club who I got to know and trust, right? Like I said in the beginning. Definitely do your due diligence, take your time. I wanted to backtrack and add something. I wanted to add something about identifying different conferences to meet. You can go not even just in person, you can do webinars. A lot of them host like webinar like we're doing today. You can get on their webinars. And when you're either in person or on a webinar, another key little veteran move is to get out your comfort zone, put yourself out there and ask questions. Like that way you can almost single yourself out and show that you're number one interested. If you've thought of a good question, that's essentially your opening opportunity to have the dialogue with that general partner or his team or her team. And now you have something to stand on if you approach them after with the email and say, hey, let's meet up for a discussion or a conversation. So another little veteran move whenever you're in those spaces and hearing them present, ask a question, and that can help you stand out and make an impression on them.
Okay. Yep. And so we talk about that. So other part is we talk about background check as part of due diligence on the sponsor. It can almost like stalking sometimes, but you could, see where they are. Some people have like different locations, and and you can look them up and you see their clinics. You see where they are, so you could know like where they're more likely to be or be in events, and I invite people. I'm not even Grant Cardone, but people have come all the way to Fort Smith. I know George came early on, but I do have some people that came, literally just showed up and then just be like, hey, I'll be around in Fort Smith right before your clinic at 8:50. Do you mind spending 10 minutes? And then he actually came by. And then we chat for like 10 minutes in my office. It was quite interesting and weird, but it was good. It was a good one. So especially in the physician space, right? If you know where they are, then you could, if you really want to meet them.
Yep. Yeah, you can take it to whatever degree you want. Obviously, if you start getting into some of these background checks, it's a paid service. There may be some free resources out there. Obviously, Google is a free resource. I don't know if Chat GPT and AI is now a potential avenue. That could be curious to see if that you can do background checks or just name search on someone who you're interested in knowing more about. But you can definitely do Google search. You can go on social media and kind of peruse their social media content and space just to get an idea. Oh, here's another great one I just remembered. You can go on a bunch of different forums, like online forums for investors, for LPs or for GPs. And just either, yeah, you can search. Number one, search. That's the etiquette. Before you ask about a GP, just search because there may have been a full thread on that person already. And so you can go onto the forums and search them and see what the feedback has been. Now, keep in mind, this is an N of just a few, so it doesn't represent the whole experience of everyone with that person, but it's some data that you can use and you process it how you want. If you don't see any feedback, then you can even ask. You can put it in the forum and say, hey guys, have you heard about this and this operator or this and this team? Anyone invested with them? What's your feedback? What's your experience been? And then you can take it from there on what that information means when you get the answers for the questions. Next thing, once you start having more dialogue with the general partner, I always recommend take your time before you jump in and do an investment with them, get to know them, have multiple conversations. If you can meet in person, even better, because there's something to be said for the nonverbal communication, like Bio mentioned. But once you've established that, then it's good to learn what the communication pace and cadence is. You want to know not only within a deal, if you're actually invested with them, or outside of a deal, you want to not only figure out what their typical pace is. Do they talk to investors monthly, quarterly? Do they put out like a newsletter or a webinar where you can get on and interact with them? And then also it's good to let them know what you prefer. Do you prefer to be reached by text or email or phone call? And how often? Bio and I were having this conversation the other day, and we have communities of investors. How often do we reach out to them? And then we realize everyone's different. It's not going to be the same for everyone because some people we know they're calm and okay, and you don't have to call them until you just
Send them
distributions.
the deal. It's like, why are you calling?
Send them
just
when the
send me
deal.
the deal.
Or send them the distribution. Others are you want to engage and see where they're at, still see if there are any questions you can answer. So everybody's going to be different. And so it's a matter of both sides communicating. The GPs need to communicate to the LPs, need to communicate to the GPs. Make sure you have that conversation when you're getting to know these GPs more.
Yeah. If they have a portal, you can literally just decide, I don't want to see the newsletter. I want to only get, I don't know if you can say I want to get it twice a week. That's something everybody deal with. I have some people, GP, that basically send email every single day. Yeah, I'm just like, look, I'm not going to check your email every day. Okay. So I usually try to find a way to, on their portal, to decrease it. Usually I will unsubscribe from the newsletter or a bunch of things and just get the deals and few things that I want to know about. Or you can just email them. Somebody's watching the email, even if you're going to be their VA. Just give, and also that's also providing feedback. Don't be afraid to give feedback. If you just email back and be like, guys, you guys send emails every day. Once or twice a week is reasonable. Or you get email once a month on a deal. I feel, is it possible to get updates like every week? And they can't. They would like to can be like, can I get better updates, please? So I think just don't be afraid to give feedback, because they'll also be getting that. Let's say we get it from one person, we might just be like, okay, maybe. But you get it from 10 people, you're like, okay, this is something we need to work on.
Yeah. On the lines of communication, you can also, while you do your due diligence, find out how they communicated during a deal that didn't go so well, during a headwind, right? And you want to find out from those other people, the other investors who've invested with them, because that's important too. Everything might be great. They may be sending you regular emails when everything is as expected. But what happens when things get tough? Do they communicate the same? Maybe even did they start communicating more? That I remember I invested with one guy who told me about back in 2008 when a lot of stuff went left. He actually started doubling down on the communications. Whatever it was, quarterly email, it became now every 2 months. So he just started over communicating. And to be honest, it's the same thing even in medicine. I know a lot of us are healthcare providers. I think about it, and I'm a surgeon. I think about it, if something starts going left with the management or the post-op, now I'm quickly communicating things to the patient, to the family. And that speaks to the character of the operator, literally. And I think the opposite is true. It tells you a lot if you start understanding and hearing news that the operator went silent. And that's crazy to me, but it's common. It actually is.
Common. Actually,
It blows my mind. Yeah.
Private equity, not just even syndication. Like you will invest in some startup, I just don't hear anything for a year. I'm like, how is that even possible?
Yeah.
But it does happen.
It happens. And if you're not okay with that, and I imagine most people aren't, then you have to know that. You want to know that before you invest with this team. So those are different things that you can definitely consider. I'm curious. I'd love to make this more dynamic. Has anybody had any experiences just vetting general partners? What's everyone's experience been like? Please feel free to come off mute, raise your hand, leave something in the comment, leave questions in the comment. We want to know hear from your experience as well. Anything else we can add upon? I actually, as we go on and talk more, I actually want to relay my own experience. What I did, I invested in 25 of these. I developed a criteria of what I wanted in a general partner based on multiple things. And you can just develop this on your own as you educate yourself. But I said I wanted things like an experienced general partner who went through a downturn, who has had at least one hard problem, because it's always questionable to me if they never had a problem, and especially if they've been in the game a long time. It's wait a minute, come on. That maybe is a little bit of a flag. Are they being, genuine? I like to know that they've had good track record, meaning they either under promise and over delivered. So they're aggressive versus conservative. I want to know. That tells me about that. Obviously, I want to do due diligence, but I want to do due diligence with other LPs. But essentially, I made like a list, like a criteria list. And it's not like a hard and fast thing. It's not like every operator I invested with checked every box, but it gave me at least a guideline to start making a list of operators. And I physically literally had a list and I've checked them off, like who I want to invest with. And then over time, I knew I would stick with one or two, three or four, and then eliminate others just based on experience. So you can do it that way. That's just my experience. I made a big list and then I'm narrowing it down. Same thing as a general partner now. I have the big list and I'm using my experiences with those operators as an LP to decide who I want to work with as a co-general partner. That's just a little personal experience of how I created my list of general partners to invest with.
Nice. Yeah, I'm gonna, if you don't have questions as LP, I'll switch gears to some of the GP. I know because I'm also an operator, so from that, and I know few people here, that actually wanted to also be, involved in syndication as a general partner, right? There's few things you have to do also as a GP, right? you know, you have to have communication. You can see from the other side also. Basically, everything you are expecting, you want people to do, you should be doing it, right? And over time, after you learn from different operator, you finally decide, just almost like residency, right? There are some physicians, I don't like their management, but I like the way she writes her note. I don't like this. And then I pick one thing from everyone until I finally develop into my own final self eventually. So you can like the communication style here, you can like the distribution over there. And then other part is transparency and honesty. That is big, regardless, right? Just like George said, in terms of as physician, that the earlier you're being transparent and honest, the less likely you'll be sued. So as a general rule, right? And yeah.
Yes. I put out a question out there so folks can think about it. I would love to hear from folks. We talked about many, but what kind of things matter to you the most? And that could be different today than it will be 2 years from now. But just really curious to hear from you guys. How about Temi? If you don't mind, let us know. Dr. Ajal. She might be busy too.
Okay. Yeah, because she also wants to be GP.
Right.
So I'll probably say, if I have to pick one thing, it's probably maybe like honesty, right, and transparency. But there's no way to prove that 100%. So track record would be just almost like there, where you can potentially or objectively prove it, or at least assess it.
Yep.
So
I agree. I think it's a good like surrogate. If you don't have honesty, integrity, it's hard to have a long track record. If those things aren't in check, you probably won't survive that long because the word will get out. It's a smaller ecosystem and you just may not stick around that much. So I agree. I think track record is one thing. How long they've been in the business tells me they're good on many fronts. It's not guaranteed. You still need to do some due diligence, but it's a good starting point. What about Taiwo?
Is she here?
Yeah, I'm here. Can you hear me?
Yes.
Can you guys hear me?
Yes.
Yes.
Okay. Yeah, one of the things I always look out for is sometimes I look out for boots on the ground. I don't know if this matters a lot, but really asking them if they have, in terms of the location of the property, if they have any boots on ground, anybody on ground within the state or the city that can also be a second high, so to speak, in terms of how things are being done on the operations of the property. So that's one thing I look out for. I also look out for, obviously, integrity and experience is also very important for me. So those are the things that I look out for. And of course, those are things that are outside of the numbers, just without asking for the numbers or the records, just high-level conversational things that I look out for when I'm talking to operators.
Thank you. Yeah, it makes sense. Because if they don't pass that, then you save yourself the time of actually looking at the
Yeah, exactly.
So it's just like the 1% rule. I'm like, don't even bother now. Yeah, I will echo the absentee owners and absentee management. In fact, in First Mate here, how we find our smaller deals is exclusively almost looking for absentee owners. Literally, first of all, we look at list source and we look for people that, multifamily, it's like a paid service. You look for multifamily, you click it, 8 units and above to 40. And then you look for location of owner, you can find it. And then you find ones that are like in California and things like that. And then you drive to the property and you find like overgrown grasses, and basically you notice that they've not been managed properly. Perfect. You give them a call, they actually you have the number. You call and then give some VA to call, and oftentimes you tell them what's happened to their property, you show them some pictures, and it will be different from the picture their property manager is showing them. And and oftentimes they'll end up either coming down to take a look and decide, or they will actually just sell it. So yeah, both of the guys is important. And also Joy can talk about the Houston deal, right? The people we bought it from.
Yep. Yep, absolutely. So that's a good example of some challenges you can face if you're not having someone who's boots on the ground. Our deal that we're closing on tomorrow was bought by a group in Dallas that was funded by a REIT in Canada. And the group in Dallas couldn't execute on the business plan for multiple reasons. And the Canadian financial backer, the REIT, took over. And they had to essentially manage this property from another country. Now, let's talk about boots on the ground not being there. They were in another country trying to manage this and using different types of strategies that just didn't work for the submarket, the city, the state, the country. But that is a great example of why that's an important thing to know. Having that familiarity to ask that kind of question and feel like you can get an honest answer or not. You want to really tease that out when you're specifically looking at a deal, obviously. At a higher level, if you're just getting to know a GP, you can just generally ask them, where do you invest? You're likely to have already discussed where they live and where they're based. Manage deals in Texas and Florida and Georgia. But yeah, for sure, you can have that conversation, a really good one to know. All right, what about Charles? Charles, what do you care about the most when you're evaluating a general partner and talking to them and getting to know them?
Actually, you guys made a great point. George, you said it earlier about when things go bad. I know you can't. It's hard to judge in the beginning, but if they can have speak to some stories, or if you're able to speak to any LPs that worked with them when things went bad, how did they respond? Did they over communicate or did they shy away? Unfortunately, I've been part of some things, not as an LP, but I've seen some things where things go bad and just radio silent. And
Yeah.
of course, that's never too good of a feeling. So that's one of the biggest things I look for. Then I just see, does the person seem likable? Do they seem like they know what they're doing, or are they reading off a script? I know sometimes everybody can't be an expert. There are different roles that different people play, but do they have some form of baseline knowledge about what they're talking about? So those top two things is what I look for.
Yeah. Yeah. And it falls back on that whole communication point. And so you can even get a sense of that. Sometimes you can get the red flag even before you've made the investment, just by going through what we talked about in the beginning half of this, like taking your time and getting to know them, seeing how they communicate, how they respond to questions, if they're open to sitting down and meeting with you, if they're standoffish from that or short with their answers. It's crazy, but I think we all have developed that intuition about when somebody is giving you their attention, giving you their engagement. And I can tell I think I can tell when somebody is actually very interested in understanding who I am, why I'm interested. They have a genuine interest in me. And so take your time to feel that out even before you invest is so important for us as LPs and even as GPs. a lot of GPs rush together and start forming these huge GP groups and start doing syndications. And they haven't done those steps. They literally met the other GP at a conference the week before. And yeah, things were good as far as your interaction and dynamic, but it's only been 3 days. But now they're doing deals and it's like, what? You don't know how that person communicates, man. You don't know how it is under stress. So start getting a feel of kind of if they're really taking their time and engaging with you and interested in you before the first deal.
Yeah. And then about the knowledge base. Obviously, yes. You can ask even some questions, to know that very quickly. I don't think you can BS your way for too long in the real estate business. I guess it's possible because eventually people are going to ask you a basic question. And if you always have to be like, I need to get back to you for everything, it's going to be difficult but yeah, you should, ask serious questions like, what do you think about the capital debt? Things like, that you understand, you already looked up. And I know investors do that all the time with me, because sometimes I'm like, do you read the slide deck? Because I send it to them and then they're asking me what's the cash on cash, so, but I just, respectfully just try to answer and try to explain as much as I can, right? But yeah, people do quiz me. They do that sometimes. And I'm like, I look at your LinkedIn, you're like a broker dealer. I know you know these things. Yeah.
All right.
Any other questions? I know
Yeah,
we have other things here, but most of them we cover. We talk about providing exceptional service if a GP, obviously, and deliver on your promise, which at the end of the day, people are not going to come back if you continuously underperform or not and not deliver.
Yeah, I totally agree. I mentioned it before. I like the ones who are conservative and essentially over deliver instead of over promise.
Yeah. And one last thing I'm going to say, my mentor does this one. So, for example, we're building another luxury senior living, which is probably going to be done end of the year or beginning of the year. I think we actually invite investors or potential to come to something like that. And I think, and sometimes they do like an open house to come and check it out. That we're going to be there at this property. We're going to have a tour. Yeah, I think Raj is doing something like that, like a tour in Houston, and that was a great idea.
Clive Davis does that as well.
Yeah.
Yep.
And we've gone for a couple of tours, and we went to a couple of tours in Tampa.
Yep.
Twice, and it was one of them was all day.
You did tour in Kansas City.
Yeah.
We did a tour here in Houston for the Ridley. Yeah.
I think you should go to some of those tours, learn some few things about that particular deal, even if you're not investing, by that asset, and also how they're choosing what they're choosing, and their communication with the investors, non-investors, and it's a chance to see at least a member of the team.
Yep.
I mean, you went to King Operating, right? I haven't actually made it there, but you've been to the Kings, and many of our investors have gone to the actual oil rig.
The site, yeah.
Site.
Yeah.
And actually, there's an investor that actually did the flight private plane together. So that's like a different level in which booked a private plane and they all flew to some place. Yep. But it was a bigger investor, invested to 250K.
It's powerful though. It shows that they're committed to being available so for that investor, man, that's the apex of availability. Fly the private company plane to the site. For me, man, I was impressed. I came to the facility, the headquarters in Dallas, and the meeting with the investor relations officer turned into a meeting with the CEO because he knew I was coming. He had a quick window, so he popped in for 10 minutes and sat down with us at the conference table and just chatted. And so availability, and it's impressive. It's not everything, but it's definitely something.
I think if anybody have any questions, contributions, It's going to be short today.
That's fine. We have so many where we go over time.
I have a question.
Go for it. Sure.
More about the interest rate. I was surprised about the interest rate. How did that? Can you give us some background on how that happened and when y'all actually found out what the final interest rate would be?
So that's all based on relationships. So you usually have brokers that help you get a loan product with a government sponsored entity like that, Fannie Mae or Freddie Mac. And Newmark was the broker that helped with that. They have financial services. And this is track record, relationships, understanding the quality of the deal. So getting that low of an interest rate fixed with that term, 7 years, IO 2 years, that just speaks to the strength of the asset and the discount. And so you get the feedback that this is a good deal if you're able to get that kind of debt product on it. There are ways to lock in the deal, the interest rate. The team was looking at kind of you look at the bond, the 10-year treasury bond, and try to decide if rates are going to go up, down, what the curve is telling you. And we initially had it at 5.92% at the beginning, but we didn't lock it in. It's a risk. It could go either way. And Bio can speak to this, but we ended up on the good side of that bet. The rates went down closer to closing. So about last week, about 10 days ago, they're able to lock it in at an even lower rate. It's the same thing can happen when you're buying a house on your own. I let Bio probably can speak to that, just watching those trends.
Yes, we watch the trends. I'm not gonna lie, I've made a wrong bet before, which I thought that I think it was the year before that deal we had to return the investors' money. So I actually thought the bank will honor it anyways, because it was until the last meeting they have to do, internal meeting. And I figured we should be good, but it went from 5 to 7 point something, so which allows the deal not to be viable. But right now we're at this stage in which most likely go to be flat or maybe go down, so anyway, so you have to basically just decide. But to get the interest rate itself in the beginning, yeah, it has to do with the kind of loan product it's available to you. We didn't always have access to agency loans, right? Even one of our deals, which we're going to refinance into agency loan, hopefully next year, we had to go with 8%. And some of it might be because the asset require a lot of fixing. It also depends on your deal. If your deal is a deep value add, it's going to be very difficult to qualify for those loans because your occupancy is going to drop significantly. And as a result, you're going to go below their threshold. Usually, they don't want you to go below 85% occupancy. So there's a lot of stipulations that come with some of these loans. But if you are continue to build your reputation, and over time, you're going to start having access to better loan products. Basically, it's just a matter of whether they trust you that you're going to keep this deal, you're going to take it to the finish or not.
You're going to keep the occupancy up, or you're going to execute on the value add plan and increase the value.
We can also partner, right? So that's another way. If you have someone with good track record, right, if you partner with them on that deal, then you might have a chance. Also, the size of the deal matters too. The agency loan, those kind of good loans also come with higher, bigger properties. More. If you're looking for 8 units, the chance of you getting a low interest rate is almost zero. It's low. But if you're looking at 405 units, there's a lot of meat on the bone for them. So would they lose the deal or at least get a 5.9% and get something off that deal?
I think you're going to see more loans like this, sub 6% agency debt, particularly on distressed assets. Not distressed assets, distressed sellers. The asset is stable, like Bio said, it has to have good expected occupancy, 85, 90% or more. But the current owner is just paying too much on the debt service because they had a floating rate debt and they're 9 or 10% and they're losing money every month. So they're distressed. They need to sell, get out of the loan, get out of the property. But it's a large, big property that's well occupied, maintained. The previous owner put a lot of value add into it. So it's stable. It's a stable property. And right now, a lot of local banks are having a little bit more credit crunch. And so the agency loans are still very functional and actually are increasing now. It's like a few years ago, the agency loans stopped because no one was looking for fixed loan anymore. Everyone needed variable rate loan, bridge loan. And so it's a cycle. It goes through the cycle. So now agency loans coming back strong. I'm looking at another deal right now that's sub 6% loan, but it's again, this is similar stories, distressed seller, assets good. So you'll start to see a lot of more of these loans. I'm assuming you looked at some other properties, Charles, when you're seeing like 6 to 7% or even more, 7.5%, 8%.
Right. Granted, they were residential.
Okay. Yeah, definitely. Yeah.
Yeah. So like I got 7.1, 7.5. So
Yeah.
still a little bit higher.
7.1 is actually good,
Yeah.
technically, because people are getting for multi-family with the local banks, you're getting like 8.5 and 9. And there might be a reason to do that too, temporarily, and then refinance into agency loan. Because if you know there's going to be, you want dependency and you want them to work with you more. Local banks are more likely to work with you more. You can go back with them and, oh, I want another loan. Oh, can you forgive me for not paying the rent? Different things you could do with local banks that they will work with you. But with some of these other loans, they expect you to be a professional. they expect you to be on top of your league. So you can't go back, you can't be making excuses. Let's just say that. So
also, I think I've noticed those loans, that the agency loans that I'm talking about, they have a lower LTV, not low, but lower than what you would see in residentials, because they're giving you 75, 80% loan to value on the residential. They're gonna charge you more interest. But on the agency loans, it's like more like 60 to 70%. I think that sweet spot people are looking for is 65% loan to value. So, yeah.
It means you have to raise more money.
Yep. You got to bring more capital, more equity.
But it makes it safer, though. It makes the deal safer.
Less risk.
So, so anyway, so those are just a bunch of things. Any more other questions? I think, Tammy, are you back? Let's see. Okay.
All right, guys. Yep.
Thanks, everyone, for coming. And we like to do this once in a while, just keep it light, discuss the topic, and also get people involved. And every time we have fewer people, it's even more beneficial that people talk, because now it's almost like a one-on-one, so you might as well enjoy the moment. So we're going to be back in 2 weeks. And so thanks for coming, everyone.
Thank you, guys.
Take care. Bye.